All right, so I'm going to go ahead and long the sell stops there. Sell stop's going to be below the gap. Oh, I'll be damned. Beautiful trade there, guys. Beautiful trade. All right, what's going on, guys? I'm going to be ranking the top 3 setups based on my data-backed model inside of this market. I'm going to be giving you guys the best, undeniably best 3 setups of the week that supplied me with the richest edge inside of this week. So starting off for number 3, we're not even going to waste any time. We're just going to jump straight into it. I took all these trades live. Everything was called out. I do not get on here and, talk about hindsight setups. Okay, only ones that were taken live. What we're going to do is we're going to go completely off of Nasdaq, which makes me probably 80 to 90% of my income. And we're actually going to go to Bitcoin, which I don't trade nearly enough. Okay, and this was actually my first ever Bitcoin trade. Called this live out, obviously with the team. I'll pop the screenshot up here somewhere here in the video. And here we have it. I had the same draw on liquidity, right? Let's back out to the weekly time frame first, okay? Because this is what actually matters. What I'm looking at is I'm just looking at the established order flow. Like, what are we obviously in right now? Are we bullish or are we bearish? Don't even overcomplicate it. We're obviously bullish. Come on now. It's been an upward trend for quite some time now. Now, do I have any reason to believe that we should have some intermittent term retracement or long-term dump? No, not at this moment. I don't. So what am I looking at? I'm looking at bullish arrays such as this gap, right? And waiting for significant time-based reactions off of that. So what I'm looking at is the delivery into this weekly gap. And I'm understanding that we're in a bullish market. So I'm just going to look for new all-time highs in the market. So we scale down. Here's the daily time frame. Not only did we deliver that weekly gap, but we also delivered this old low right here. We drop down, we're sweeping out sell side, and we deliver a weekly gap. Now, inside of an aggressively bullish market, what do we have? Look at this right here. Every single time I see a smooth top in an aggressive bullish market, this is something that I look to target. The triple top. See that? See how smooth that is? Double top here, double top here. Way too clean, obvious target. So now what I'm going to do is I'm going to scale down to the hourly chart. And the only thing that I'm looking for is us to leave a consolidation number 1, which is right here, right? And then I'm waiting for specifically price to give me a light bulb displacement in the market. What is the light bulb displacement? There you go. It's easy to spot. And it's like, oh, wow. Okay, yes. Let me look at the charts now. This moment. Now I'm not chasing, right? When I see this large candle right here, what do I wait for? I wait for the retrace into, what did I just show you on the weekly time frame? Same thing. If you're not familiar with fair value gaps and you're watching this video and it sounds like I'm talking a foreign language, you need to immediately join my Discord and I'll teach you all the reins. But aside from that, this is what we're rolling with. Hourly gap delivered in the market. Once I see that, I'm immediately buying this. I'm seeing this as a undeniably high quality buy in the market. We're in a discount relative to these highs down to the low. We had that light bulb displacement. We now have a retracement into a clear expansion. Now what do? I long it. Why was my stop loss right here? It was actually right here. I'm using my stop loss as a way to weather these two inefficiencies right here. And I'm putting my stop loss down in this lower one. This, I know for a fact, based on experience and data that I collected, this lower first fair value gap that was created should be treated as a breakaway and not delivered. So by knowing that, I long it, calmly put my stop loss down here. And what happens? We chop around a little bit and then we take this huge deep dive. Am I panicking? No, I'm like, all right, I'm ready to be stopped out, or I'm just going to expect this to be another drop down to accumulate more longs and send us higher. All right. And that's exactly what I did. We rallied up, boom, smashed up to the highs. And at this point, I'm at my peak. I'm up like $4,000. All right. So I'm the last one to be greedy. When money is on the table, I always teach my students to pay themselves. Okay. And never just let it come the whole way back down to stop loss without paying yourself anything after being so ridiculously in profit. So I was up 4K and then price dropped down a little bit. And then at that point, I was up $3,000. So what I did was I actually took a good chunk of my position off. I paid myself $2,000, and what I did was let the rest ride. And after I did that, anytime I pay myself, I cut risk immediately. I went break even, Obviously, fast forward, you can see that break even was hit. After the break even was hit, obviously price explodes. It's only right that it does that after it break evens me. And I think I'd be up about $6,000-$7,000 at this point on that position, but I'm content with the money made. This is going to be the number 3, third best setup of the week. Let's move on to a very, very good number 2, second best setup of the week. That is actually going to be the Friday trade that I took live with my members. Okay, so it's currently in a model number 3 long. It performed. It's like really, really fast. One of those ones that, like, you know, it's really easy to miss, but obviously you can see I got on board here. This right here is the lowest hanging fruit, model 3 target here, the relative highs. All right, there's the partial. We're holding the runner then. Like I said, I'm going to reduce stop loss. I never require the full tick of the high to be ran. That's why I take partials at internal range, buy side, excuse me, and I'll hold runners to the highs. Take your profits when they're on the table. All right, okay, so this right here was undeniably textbook. Very, very good. Just clean, obvious. One of the easiest setups of the week. But this was met with one complication. We're going to dive into that. So those are my members that are watching this. You guys are familiar with my model number 4. We had all the mechanics supporting model number 4. We tapped down into the 15-minute fair value gap, inefficiency in the market. Price taps down, sweeps an old low inside of the 15-minute gap. That's very key. And what I just explained with Bitcoin, same exact thing with the Nasdaq. All of my trades this week were longs. Every single one of my trades were surrounded by the idea of me knowing we're drawing to all-time highs, knowing that we're bullish. How did I know that? 2 things, market structure and just overall experience. I know where these markets are likely to go consistently, not every time, but most of the time, because of the experience I've gained in the market and just relentlessly showing up every single day. Okay, by knowing the bias is bullish, I'm only focusing on longs. So what do? I wait for phenomenons like this. Price comes down. What does it do? It liquidates those who chase the original long out of the 930 opening range. I'm loving that. Okay? We tap into that 15-minute gap. And then what happens? I don't just long when we tap down into discounts, okay? Because if I do that, can I make money? Yes. But what's going to happen is my win rate will decrease from 85%, probably is down to, I'd say 50%, maybe even less, okay? So what do? I wait for a time-based light bulb displacement in the market. We got that right there. What's a light bulb displacement? That's the thing. You don't have to ask that question when we're talking about a light bulb displacement. Immediately something flickers in your mind. You're like, okay, whoa, what was that move right there? I'm looking at this. This is interesting. That type of thing. And why was this a light bulb moment? Because we had a move creating multiple fair value gaps, multiple inefficiencies, following, right, a sudden move to the upside off of the higher time frame key level. That's what makes this movement here so key, is because it's tapping off of that higher time frame inefficiency. That is what makes this so important. So whenever I see this, I'm immediately hunting for longs. Now at the time, this thing was moving ridiculously fast. This was the only thing I can chip away from the setup, and really is kind of keeping it away from the number 1 spot, is the fact that it moves so ridiculously quick, right? There was zero retrace, right? So what did I have to do? I had to find an entry before we came up and swept internal highs, okay? My model is valid as long as we don't come the whole way up and sweep my first target. So my first target was actually these relative equal highs, as well as the previous hourly high right here, okay? 2 high quality opposing targets. Why are they high quality? We're in a bullish market and it's a relative equal high phenomenon. Anytime you see smooth highs like this in a bullish market, that's going to be prey every single time. Okay? Here's the kicker. I don't think I'm going to get an entry here, but what happens is we actually create these multiple inefficiencies. At this point, it's prominent to me that they're not going to be filled in. It's a ridiculously fast market. And then this is where things get interesting. We immediately change our state and delivery above the down candle right here. And this is immediately what I want to look to enter on. Now, I know in a market like this, I'm probably not going to get a retrace down into it. So what do? I simply just long with my conviction, with my data backing this, not just some random guess game, okay, like most people out there, with data backing it. I know for a fact this is going to be a high quality long on this down candle. For my members that are watching this, I'm just going to put my fib right here. You guys tell me what you see. Most of you already know what we're looking at right now. You're going to be smiling, nodding, and saying, hell yeah, that's crazy precision. Surrounding equilibrium. So, model number 2 entry right here. Routed up to the highs. Beautiful setup. Easily the second best setup of the week. Now, moving on to number 1. Easily coming in for number 1 is going to be right here on August 7th on Thursday. Why am I calling this number 1 setup? It's going to be surrounding this long here. Remember, I told you this week I only took longs. Only was within the narrative of the higher time frame bullish market. I don't really favor shorting in a bullish market. Okay, let's back it up for a moment. All right, what's going on here? I know the draw on liquidity. What is that? All-time highs. I know that we're still supporting a bullish market. We had this huge run up here. And then what is this right here? Is this scaring me into thinking that we're reversing and then I'm going to try and pick a top? Hell no. That is what retail dumb money does. It might sound harsh, but it's the reality, okay? Price drops down, delivers this 4-hour gap. Just like I told you guys in the Bitcoin trade, just like I told you guys in the last trade, I'm watching these higher time frame inefficiencies and framing lower time frame entries based on the time-based reactions we get out of them. That is the highest quality thing you could pick up in these markets by far, undisputed. Okay, let's go to the hourly. Are we sweeping old lows while tapping into that high time frame key level? Let's take a look. What's this right here? Sell side. Oh, but why that low right there? Do not overcomplicate it. Don't even go down that path because I've been there before and it set me back significantly. And it was only until I stopped overcomplicating it that I started actually making real money. 15-minute time frame. What do? Sweep sell side, tap into that high time frame key level, and then we immediately change our state and delivery. Let's go to the lower time frames and see, just like I talked about in the other setups, do we get that light bulb displacement? Let's check it out. Here's our 1-minute time frame. Okay, what's this right here? The same thing that I explained in the other trade. We have a light bulb displacement in the marketplace. Why is it a light bulb displacement? Once again, you shouldn't have to ask that question. Look at that. That's obvious. Huge immediate run up within a macro. Okay. Creating not 1, not 2, not 3, but 4 inefficiencies with this time-based run. Okay. What makes this a significant run? Why do I care about this run? Number 1, it's taking place within a specific key time. Number 2, it came out of the delivery of the higher time frame key level / inefficiency. Okay, so by knowing this, I know that it's time to long. And what brings this all together in a neat bow, and what makes this by far the number 1 best setup of the week, is how ridiculously obvious the draw on liquidity was. What did I tell you guys in the last setup? In a bullish market, every single time obvious opposing smooth highs are created, that's going to be prey. What's this right here? One of the most ridiculously obvious draws in liquidity I've ever seen in my life is this right here. 1, 2, 3, 4, 5, 6, 7, 8. 8 stacked trendline highs. What's above all these highs? Trailed buy stops from those who are continuously shorting the market. Every single time a new high is formed, there's more buy stops going above each and every one of these highs. So by me knowing that, I know without looking at any book map, looking at any indicator, I don't need to look at any of that stuff. I know for a fact there's a ridiculously large amount of orders resting above each and every one of these highs with this trend line stack up. Okay? So it's a ridiculously obvious draw on liquidity. All I need to wait for is something like this. Now, the interesting part about this is I made $1,000 less than I was supposed to make on this trade. Granted, I made $2,000, but here's what happened. I miscalculated my stop loss. It's not the market's fault. It's not, oh, the stupid market. No, I simply miscalculated my stop loss, and as a result, I paid a $1,000 price. It comes down, taps my stop loss to the tick, and then runs up, but it didn't run without me. Okay, I've seen this way too many times to be passive and tiptoe around, be like, oh, it stopped me out to the tick, and that's it, I'm done. Experience guides me. Way too much experience, way too much conviction in this type of phenomenon. So what I do, this candle right here. Okay, as soon as I see 1, 2, 3 lows taken with the retrace, and then I see a solid body candle like that, it's done. I'm immediately getting back into the market. Once again, I've seen this one too many times to be passive and not trust the model. So what I did is I simply placed my stop loss down below this low. I know that this shouldn't be taken and will not be taken because we've already done the dirty work. We've already swept the lows here after the light bulb retrace, and the highest draw in liquidity is above, not below. So I immediately enter right there without hesitation, not even in the slightest. Put my stop loss down below, 2 Nasdaq contracts, ride it up. I should have made $3,000, but I'm content with the $2,000 made. No greed, no regrets. So I definitely hope you guys enjoyed this one. It was a brief overview of 3 very high quality phenomena in the market. It's the same thing every single time repeating. It's not identical, but every single thing that I trade is backed by data. It's not some random price action, because at the end of the day, you got to be trading something that's actually proven. If it's not a proven model, how can you ever expect consistent results? You only have the privilege to expect consistent results if you have data to back up and prove what you're trading is any different from gambling, an actual true winning edge in the market. And that's what I'm showing you guys here right now. So if you found this useful, hit the like button, comment, do all that good stuff, and I will see you in the next one. Peace out, guys.